What's good, OS family? It's been a while. It's been a minute, but we back. We are back, and we are here for the rest of the year. All right. So we're about to start quarter three. Sorry, wow. We're about to start quarter two, and yeah, what a more fitting time to get back on it. Don't know. So we would be aiming for this quarter here to get funded, fully funded, and being consistent, rolling into profitability, and just taking it from there, building, buying more accounts, trying our best to really and truly find our consistency in the profitability and use these firms for as long as they will be here and for as long as we can until we have enough capital for ourselves. We're not going to just stay on prop firms. We're definitely going to um use our own capital and yeah, do the thing properly. Yeah, and we definitely going to be on this channel documenting everything. This year also I'll be transitioning from just trading videos to the other videos that I would like to be sharing, fitness stuff and just other stuff. But when that time comes, you'll definitely get it. So, hopping straight into the charts today, we look. So, Q1 was pretty. I mean, how it needs to be. This is my first time. This is my first full year of getting off 365 day, seeing the full year of the different market conditions. Just for a quick recap, I started off this journey last year, February, with ICT, and I finished the mentorship core content, and I began, I was growing up. I was growing a lot of accounts easily in demo, and I decided to buy a prop firm account in June of last year, and from then, that's when the journey really starts. So I guess what I'm trying to say is really and truly from August is when actually it's really from October when I really started understanding market properly. So kind of bought the account a little prematurely, got taught I understood certain things. But really and truly it was beginning of Q3, ending of Q4 is start of Q4 and then of Q4 is when I really discovered what I was looking for in the market. So this year is just the year for me to implement everything that I've learned over the last year and use what I've learned just to get funded, and then while I'm doing that, get consistent, and then next year is where I really looking to take do withdrawals and stuff, so we could have an idea of where I'm a growth in terms of we're anticipating certain things, right? So we'll start with the dollar index analysis. We were bearish coming into the beginning of this year. Oddly enough, I was bearish coming into the beginning of the year because even though the dollar index coming into 2024, dollar index was going up as we see here. Clearly, index was going up. But if you notice also that from the same point beginning of the year, right here, we had a slight down move, right? We were coming down, but then on pound we were going up. We were going up while the dollar index was doing the same thing, going up, and euro at the same time. Well, euro way more reflective of the dollar index. So euro, we had a clear down move, then we broke it to start Feb, and we started moving up. until this last trading week. Actually, we found some resistance at right before my birthday, which is the 9th, on Friday the 8th. Go back to Friday the 8th is where we broke the highs from the original consolidation on foreign, and then we turned. And I thought, you know, that my analysis was, even though index was going up, I was still bullish, especially how we broke these highs and closed above it. I thought, okay, we closed above, this swing high and this swing high, right? This one being the most influential one that sent prices down. Well, the most influential because it was the most recent one that sent prices down. But this one over here, as the long-term high, how we broke this high, I was assuming that any retracements would have just been back into this swing high here to continue going up. But the dollar index after FOMC, because this was Wednesday, FOMC drove prices up really quickly, and it used this volume imbalance here, this whole liquidity void, as support, and this liquidity void and the weekly order block, and it started trading up, and well, it broke this high here, all right, this swing high here, and the next closest in proximity is this high at this imbalance here. So this will be my draw for the next move. So if that's the case, and we saw also, not only because we see dollar index going up, because as I outlined, dollar index was going up, but pound was going up also, euro was going up also, while dollar index was going up. But this week was a very interesting week. If you look on the daily chart, we saw this swing low here. It didn't just sweep. Like for me, if we tapped into here and immediately rejected higher, and see how we trade down into it right at this level here, and we get a small reaction, the fact that we close beneath here indicates to me that we had a breaking structure. So any move up, as I stated here and here, anticipate lower prices. Any move up is manipulation. Sell above the opening after liquidity or higher time frame theory is met, then we have a confirmed market structure shift. This move here that closed underneath this swing low confirmed for me that we have a breakout structure, right? And what we've been seeing from price before this move is, if we drop to a lower time frame, which will be the 4-hour chart, for FOMC here, I really thought price would have seek this relative equal highs and break it, but we literally just filled. I mean, we went over it a little bit, but we respected this order block, this last up candle before the down move, right? So we look like we traded up to maybe a little over a half of this order block, which is mean threshold of this order block, and then we sold off, filling this imbalance here. So that told me that this was a long-term high and this is an intermediate term high. And then when we break these lows here, that was the shift in market structure on the smaller time frame that is the catalyst for this move here. So basically what ended up transpiring is that Wednesday, which was FOMC, was just the run up that would have inevitably created the new order block. 3 up close candles consecutive, we broke it, so this becomes the order block. This filled a imbalance, so this also is an order block plus also a intermediate term high, this being a long term high, right? We have a short term swing high to the left. That's why I'm anticipating this, what I wrote here, anticipate daily swing high forming for classic Tuesday Wednesday high. So this coming week here, I will anticipate prices trading up all the way up into maybe this area here, which is the halfway of this candle we drop to the 4 hour, it should fill in this void here, creating a swing high in here. I mean, we have a swinger to the left and a swinger to the right, but from the daily chart perspective, I would anticipate a failure swing up here, and that will confirm this will be a long-term high, this will be an intermediate term high with the expectation that we continue tackling these lows and these relative equal lows here and find our way down into this PDRA from on the daily chart, because the only PDRAs that we have here from a daily perspective is, well, if we go from the weekly chart, we can see that, oh wait, is that monthly? Oh, right, we have monthly. If you have it up there. But if we look from the weekly perspective, we have a CB sell BC, buy side and balance sell side inefficiency here, and from the daily PDRA we have most recent over here. We have our order block in here, but here's where we expect any bounce, and if we have a failure swing, the next PDRA we have is this fair value gap here. So I'm expecting lower prices for British pound, also lower prices for euro. Euro chart a lot clearer in the sense of market structure, and we can see here that I'm expecting the same thing over here, where any retracements up to be manipulation. We saw that same FOMC. We literally for FOMC we traded up into this daily fair value gap, and if I drop to a smaller time frame, see it a little clearer, trade up into the same fair value gap. So we have the same thing that happening for British pound happening for euro. We broke underneath, or we made relative equal lows. We haven't tapped into the sell side as yet. Anticipating that to be the draw, and the PDRA on euro that I expect, well, we have no PDRAs in here to trade off of, so I could see that euro would be seeking liquidity. So this relative equal lows to be the initial draw, because we're so close. If we don't tap into this before, like when market open and if market decides to trade up, I would obviously be looking for a short. We have Friday high in here. I'll be looking for a short just to get on into there, and then any run up after that I could anticipate that being a failure swing. So we close been underneath the swing low. We have a daily order block in here that from a higher time frame market structure, from a daily chart, we have a high, right, long-term high. Then this would immediately be the intermediate term low. I'm sorry, the intermediate term high. It filled in this gap, so this immediately becomes the intermediate term high. We have a short-term high here, swing high to the left. We don't have one here as yet, so I can anticipate here trading up, a bullish day, then a liquidity sweep and trade down. So anticipating a swing here to create a short-term high to the left, a short-term high to the right. Then once I see a trade underneath the initial intermediate term low, that'll be a break of market structure on the downside. Well, I confirming the idea that we already have, and I'll go short aiming for this liquidity here, and maybe leave something on to try to get on to these lows here. potentially coming back into this monthly fair value gap underneath here, because I'm not really seeing any weekly anything really. I mean, I have this weekly order block here that didn't get tested as yet, really. So that could be a PDRE to influence price. So, but we're aiming for the low hanging fruit here. Now, if we come over to Euro card chart, we had a daily sweep. I put it here. Buy side was swept, creating a swing high. Selling should be the drawn liquidity. So this candle here, which will be Tuesday, classic. Wait, this was Tuesday, classic Tuesday high of the week for last week. This candle here is an important candle. Not only is the new order block, is because this was a swept. This didn't. It traded above it, but it didn't close above it. So Tuesday candle here literally just traded up in New York, took liquidity, swept it, and trade down. Then we close on that, so that confirms the draw on the downside. But you see how choppy Euro card chart is. It really choppy. Euro, dollar card been bullish. Buy side, literally the high on this is 61.36, 61.43. We didn't reach it as yet, but we're definitely going to take this buy side liquidity pool, and we can see that dollar card. Okay, we have our CB, sell side and balance, buy side inefficient. We have a CB here, a monthly CB. So the draw is this PDRE up in here, and then we'll see if we get up into the monthly buy side. So we bullish going into this week. We start in quarter 2, and if we have a look at the last 3 months, the last 3 months has been basically a consolidation. We not really, I mean, we gain lower price. March about to finish. March almost done. 5 days for March here. 1, 2, 3. January, February, March. So if we can see that what we was given is we have a monthly swing high, and we saw March trade up, sweep that high, and now we traded underneath December's close. So let me just draw a line out here. So the opening of this candle is 62.31. $62.31. All right, so jump to our 1 hour chart. See 62.31 level. All right. Actually, move on 4 hour chart. Good. All right, so price using the opening for the month as support. Let me break underneath it. Resistance, trade back over it, support, trade up. This was last week, week before last week. We traded up, took all the high, so it was in a premium market here. And then we saw a breakdown, breakdown, and now we underneath it, so we can anticipate any movement up again to go lower, where we have, so it's external range liquidity, and the internal range liquidity is underneath here. We have relative equal lows here, then we have the daily PD array underneath here. So okay, and we have a market structure here. Okay, good. So we have a potential setup going into the next couple days and weeks. And pan back to the dollar index. All right, this swing high as the draw, and we'll see if we could get up higher. And for NQ, well, I mean, the S&P market, we've been making highs, but we going into the fall, and if I'm not mistaken, going into the fall, I have to check it back. Don't quote me on this, but I think going into the fall is where prices tend to come down. I'm not sure. I have to check it back. But I'm keeping it in currencies in the meantime. Excuse me. Yeah, keeping it to currencies because a little more clear on this ends. So my analysis going into quarter two. Looking for lower prices until we see any significant shift. This week actually, well, this week I'm looking for classic Tuesday, Wednesday, high of the week. I'm just going for X Factor and see how the upcoming week looking. Okay, no news Monday. I'm not doing anything Monday. Back to my trading days, Tuesday, Wednesday, Tuesday, if possible, if needed. Tuesday we don't have anything, no red folder. Oh wait, we have this Tuesday, so no foreign news. So I'll be looking to trade in the New York session on Tuesday. See what we have. Really and truth, I will look at our position in London. Looking for the classic. Well, it all depends on what Asia does. If Asia is outside range, I'll be up for London to see if we see anything in London. And if not, well, definitely we'll be looking for a setup on New York, anticipating high prices for Tuesday, and we anticipating that to be the manipulation because we want to go short. Wednesday we don't have any. Oh, we have Spanish flash CPI. If we do get a good setup, what would we expect Tuesday? I would look for it Wednesday, and if not Wednesday, well, Tuesday we don't have anything in here for foreign, so I guess we would definitely get our setup by Tuesday, Wednesday. Looking for the high of the week, and yeah, we just move to suit. Not anything out of the ordinary. We just trade a normal weekly profile, market structure, drawn liquidity. That's it. Power 3. And we're looking for the highs Tuesday, Wednesday to sell short. If we get buying opportunities, we would explore them, obviously. But our trades, the longer trades to hold, we're looking at shorts, and that's about it. So we shall keep the wait, I didn't do anything with pound, with sorry, not pound, with euro. What we see here on euro, we traded up, put our wick next to January. We kind of balance this out from a higher time frame, and we close. It look like we're about to close at the low end of the month. So the next month should open, give us a move up, and then, you know, subsequently, ultimately, go lower. Look at it from the weekly chart perspective. Yeah, the weekly are a lot clearer in terms of what you want to do we have relatively equal lows here. We have our weekly swing low here, and then we have the next. We already close at this weekly. This close at this candle is 59.88, 59.98. So we already closed below this order block here, and the next order block from a weekly higher time frame perspective is this one here. So there's the next higher time frame PDRA, and that is also the daily fair value gap. So yeah, definitely we have a draw on liquidity and a potential bounce at this PDRA at 36.23. 36.23 is our long-term target. Is the weekly OB. There's the monthly OP. And I want to say there's a monthly order because our week already I'm gonna prematurely call it a monthly order block because we haven't really, the month's still going on, you know, but it's the potential monthly order block. I will lighten this, and I would lighten that. Can't really influence me too much, but I want to see if I could forecast that. And we have a big, yeah, so we have a PDRA down here. So yeah, okay, so we good on pound. We just need to get some better market structure on the daily. But if we drop to the 4-hour, even all our, yeah, the 4-hour not all our show as yet with the market structure, but it way clearer on, from even on the daily perspective on euro. Daily swing low here to confirm this as an intermediate term high, which I expect. I want to see a swing high form here and then a breakdown in it, and then this here would be our confirmation to seek lower. So, oh wait, I'm not seeing a daily fair value gap here as a draw on a PDRA underneath the swing though. Yeah, we have a daily gap underneath here. Alright, so if we get underneath this low, after breaking this one, if we get underneath here, then I can anticipate prices coming down into here, which is also a weekly order block. So yeah, that'll be it for this analysis going in. I'm looking for lower prices on foreign. If we get opportunities to be a buyer, we're taking it, but we're not holding them for the lower of the week or anything. We're looking for the higher of the week on the day, on certain days. So yeah, catch you guys back next week. And well, how we're gonna do this stuff now, I would be taking the trades after we do the analysis. I'll taking them and I'll be posting them so we could compare the analysis with the actual trade. Because before I was keeping the trades on, keeping the data and stuff on my personal journal, but after I do the weekly breakdown, I would post them and follow the breakdowns that I do on the week, if that makes sense. So I'll catch you guys back in those videos, and then we'll do the weekly recap next week and then the forecast for that coming week. So Enjoy.